All right. Hey guys, today I'm going to do something a little different. I'm going to look at currency pairs, but I'm going to keep it focused on the US dollar, and I'm going to keep this video rather brief. Let's take a look at the dollar index through the lens of Elliott wave and then try to discern what may be going on with a couple of pairs based on what we're seeing with the dollar. Okay. All right. Let's dive into the DXY chart. All right. So here we go. Just zooming out on the weekly just to get a lay of the land. I've already done a bunch of homework, but really what I'm thinking is 1, 2, 3. This is a large degree three-wave move. Just so you understand what we're looking at a weekly chart. And this low over here is from March of '08. And what you have here is a trend line on the top. And then if this is going to play out the way I'm thinking it may, you put a parallel line underneath. And internally here, there's another 5-wave move, you see, because that's the way Elliott wave works, because the nature of price waves is that they are fractal, which means self-similar at scale. So if this is a wave 1 and a wave 2, and then internally you have another 1, 2, 3, 4, 5 for wave 3. And then what you have here is a wave 4. And once you understand the character of certain waves, you can just look at a wave and ask yourself, does this wave have the right look for what I think it is? And internally, does this look like a wave 3 in here? Yeah. Does this look like a wave 5 in here? Yeah. So internally, you have a 1, 2, 3, 4, 5 of wave 3, a larger wave 3 that goes with this wave 1, 2. Okay, so I'm just giving you kind of the general lay of the land as we look at a weekly chart of the DXY. That's the dollar index. So this does look like a wave 4. Well, what are the characteristics of a wave 4? Well, overlapping, moving in threes, basically going net not very far. And sometimes before a wave 4 ends, you get kind of the real move of the wave 4 and then it reverses. So LA wave really gives you a context for the overall market. And the thing I really like about Elliott wave is that once you understand how it works, you can look at a longer time frame, which is what we're doing now, looking at a weekly chart. Then we're going to hop down and we're going to examine this single wave right here, because I already know from looking at this and the way I'm measuring that, and then with a parallel trend line down here, that because I'm thinking of this as a wave 3 top, I'm expecting a wave 4. And the way we measure for a wave 4 is we put our simple retracement fib at the bottom of wave 2, okay? The bottom of wave 2, and we put the other click at the top of wave 3. And then we look to see where does I start looking at the 236 to the 382 to the 50%. This is this typical area where a wave 4 terminates. Very typical. So given that we're already well into the area of the 236 to the 382, I just take that off of there to keep my chart clean, and also suggest I want my chart to remind me and to suggest to others who might be looking at my chart that this is really where I think the wave 4 would terminate. And wouldn't it be cool if it came down and touched this line? But before we get into that, the first thing we want to do is figure out, how do we confirm a top? Well, the way we do that is by first looking at this longer time frame chart. In this case, it's a weekly chart. And then we're going to look at the internal structure of this wave right here. So what we're about to flip to next is really only concerned with this wave, because I want to try to discern, has this just in and of itself, based on the context that I'm looking, in other words, I'm looking for a top here. So based on that context, I want to then look at a lower time frame, where in Elliott wave speak, we would say a smaller degree, a lesser degree of just this wave structure right here, to try to discern whether or not it's topped, and if it hasn't, what do we think? Where might it top? Let's take a look now at the lower time frame of the DXY. So now I know this is like another universe. We just left the weekly chart, and now we are dropping down to the 4-hour chart to just look at that one singular wave, and here it is. Now, there are two ways to count this. So what I'm showing you right now is I'm counting it as a three-wave move, A, B, C. And as you know, if you've been following me long enough or following Elliott Wave long enough, you know that a standard target for an A, B, C wave is the 100 fib as projected from the bottom here. What you have is 3 clicks on your fib projection tool. So the first click goes at the swing low, the next click goes at the swing high, and the third click goes at the swing low. And then that projects to give me these yellow fibs. So anytime you see an A, B, C count on any of my charts, it's going to be in yellow. Anytime you see any yellow Fibonacci levels on any of my charts, you know that I'm looking to measure something that I think is moving in threes. So there you go. All right, so look where price came. Bam, right up to the 100 fib with a wick on the 4-hour chart and got rejected. Wow. Okay, well, that's compelling. So maybe the top is in, right? Well, that was easy. Top is in. All right, not so fast, though. There's another way to count this, and that is as if this AB right here is really a 3, 4, and we're getting, I'm sorry, a 1, 2 is what I meant to say, and that we are getting a 3, 4, and one more shove higher. Is the dollar done? Could the dollar regain? And this is where it needs to save, honestly. If it's gonna come up into this box, which is where I think it would go, if this is really a 3, 4 with one more wave higher to come, I think it comes up into this ratio box. This is also a ratio box here, but this ratio box is a different animal, okay, as relating to this C wave. So if this is really a 3, 4, then it's going to get one more shove up. But have I answered your question yet, which is how do we discern if the top is in? Well, one way to do that, another thing that's a unique feature of Elliott Wave, is a true impulse is going to move in 5 waves. Okay. So it typically, when something moves in 5 waves, it's either a C wave, an A wave, but in any case, it is typically signaling a trend change, regardless of whatever degree you're tracking, whether it's an A, a C, or the first wave 1 of a trend reversal. So that's what we're trying to discern. Well, let me zoom in here. Now, look, I apologize. I know some of you guys are on these tiny screens. I hope you're watching this video or able to watch this video on a larger screen. It'll help you greatly if you at least maximize the video on whatever screen you're using so you see the full screen, because I know I'm talking about these tiny numbers here. So what you can see at your naked eye here is that this is just 3 down so far. So a full 5-way down to give us some confirmation that this is the top. It's going to do something along these lines. This may already be wave 1. This may already be wave 2. If so, if this is 1, and if that is really wave 2, wave 3 needs to come down to at least this level. Then you get a bounce for a wave 4, not to come up too high, and then you're going to get a final shove down for a 5th wave. Okay? That is how you determine for sure that the top is in, and the dollar is not expected to go back up anytime immediately. So taking it one step at a time, this is what we will track. Now, you might be thinking, well, dang, that doesn't do me any good. It means I got to wait. Well, not necessarily, because there's an internal structure inside of here. Okay, now I can already see that inside of here is another potential 1, 2. Because just as I explained to you on that weekly chart, that price waves are fractal. So inside, they're like Russian dolls. So inside of a wave structure are other smaller wave structures that resemble the larger degree structure. So inside of a wave 3, if this is really a wave 3, of 1. Inside of this wave 3 should be another 5-wave structure. So one way to discern that is hop down. Now, look, I know I'm basically teasing you with how are we going to know if the top is in? Well, the answer is not really short and sweet. But if you're willing to put in the work, this Elliott wave stuff can really change your game. So inside of this, if this is really about to be wave 3, is going to be another 5-wave structure. So the way we measure for that is put the fib in TradingView. It's called the trend-based fib extension, but whatever platform you have, it's going to have something similar. It gives you 3 clicks. Put the first click at the swing high, the next click at the next swing low, and the third and final click at the swing high. That comes out to 107, 194. I'm just going to move this over 107, 194, close enough. And then I go to my templates because I've got one saved called standard standard pinball. Boom. So I select that and it's already got the fibs pre-populated. Well, look at that. Would you look at that? So this is the zone that we had for wave 3. So then because the nature of price waves are fractal, we then measure inside of the potential wave 3 for another 5-wave move. These are standard fibs for a 5-wave move. So far, this looks like the beginning. Now, look, this whole thing is 3 down to here. And then internally, it's also just 3 down for now. So the first, we're going to confirm the top being in by step. It's a process confirming that the top is in. Now, you can still be trading this while you're confirming the top is in using parameters. And one of the parameters is if you have a 5-wave structure, wave 4 should not encroach upon the wave territory of wave 1. So now we are talking about this internal wave structure in here of this wave 3. So if I'm assuming this is wave 1 and this is wave 2, and wave 3 is in progress right now, I'd want to see it come down to this 1618 level before it bounces meaningfully. Yeah, it can bounce on the way down because I'm not going to make you crazy, but guess what? Inside of this wave 3, there's another 5-wave structure. Now look, the lower you go, this is a very important fact. I want to make a point right here. So I'm going to go back to look at you. The lower you go, the smaller the degree that you track, the less reliable it is. That's why most professional Elliott wave guys are looking at a daily, maybe a weekly, but at least a daily, and then coming down to the 4-hour and then coming on down. But you really should not be trusting the really uber micro nano internal structures. For that, you'd be better off just using simple supply, zone, support, resistance, real basic. Keep it simple on the lower time frames. But you're going to use Elliott wave on the longer time frames and bring that context down with you on the lower time frames. But do not think that the nano time frames are going to be as consistent as the longer time frames, because they aren't. Sometimes they are. So they're inconsistent. Keep that in mind. Okay. All right. Let's go back over to the 1-hour chart and imagine that if this is a 1 that I just showed you of the internal structure right here, I'm going to mark that level. And it's going to be 106,494. 106,494. So then I mark it and I come over and I get it exactly right. And I copy it. And what I'm going to do is just put a little label on that price point. So I know that internally, I do not want to see this wave come back up and get above there before it touches this 1618 line. Okay. So these are clues. These are parameters. So, the ideal short was after this wick, seeing this noise in here. That was a good place to short. But a safer way to do Elliott wave is wait for what you think is 5 waves down. And I can just do this by eyeball. 1, 2, 3, 4, 5. 5 down for wave 1. You don't short in the hole. You don't go, oh, it's going down. So there's 5 waves. All right, I'm going short. No, because that's precisely when you expect to see a 3-wave correction. If it's truly an impulse in 5 waves, the opposing bounce or the opposing retrace or the opposing correction, whatever you want to call it, is going to be in three waves. Well, just use your eyeball. 1, 2, 3. Does look like a three-wave correction. And you can also eyeball this, that the distance from this high to this low was retraced somewhere between the 618 and the 886. I promise you, just eyeballing it, I can see that. It looks like it's actually around the 764. So that's another clue. So it's the structure of price, meaning is it in 5 waves or is it in 3 waves? And is the bounce in 5 waves or 3 waves? Those are clues based on the structure of price. And we use Fibonacci as well. So you know that a wave 2 typically retraces, let's call it the 618 just as a standard. But when an instrument is volatile, it's not like it's just going to go to the 618. So you use a combination of fib zones and structure of price. So this looks like 5 down. This looks like 3 up. This is arguably 5 down again for a nano wave 1 of 3. And you could go drill down even further, but I'm not going to do that. I'm just going to eyeball this and say, yeah, this came up to right around the 618 or the 764 again. And then it got rejected, just like it got rejected here. It got rejected here. So that's 2 clues. In other words, here's a high, here's a lower high, here's a lower high, here's a lower high. But that's fine. But we want more confidence that the dollar has topped. So the first clue is this is going to keep coming down and get somewhere down into this zone for a proper wave 3. Then the bounce should not get below this level right here. It's a little bit higher than this level. But if this does make it down here, I'm going to mark this level on my chart. Okay, twist my arm. I'll mark the level right now. Boom. 106,583. 106. I don't like to make my charts too busy because they're already going to be busy enough using LA Wave. Especially when you're tracking multiple degrees like I'm doing right now. I'm just doing this for educational purposes, but it does make the chart messy when I go back to the 4-hour chart. Okay. But the concept is, let's see if price can finish this wave 3. That's the first clue. The second clue is it should not get back above this level of 106,583. Let me just go ahead and mark that up. I may or may not leave this on my chart because I'm going to go back to the 4-hour chart. You'll see what I mean when I say it gets messy. And then you're going to want to see a 5th wave come down somewhere down into here. Okay, if that happens, then you know the dollar has topped. Highly likely. And then you can get into, now it's going to bounce. If it does 5 down, it's going to bounce. And it's going to come back up somewhere between the 50%, 618, 764. And then we're going to look for another short in what should be a much more lasting move down. But before I get all off into that, I'm just keeping it simple and talking about what is at hand in the immediate, sort of in the present moment, meaning like the rest of this year and maybe a little bit into next year. Okay, so those are your parameters. 106, 494. And you want to see it come down here and certainly get below 106 for sure. Ideally, it keeps coming after a little bounce in here, and then it comes down. Okay, so that's how you use Elliott Wave to get your parameters and also get the idea of confirmation. Is the top in or not? Now, look, here's the deal. Now, you know what I'm going to do? I just showed you all this stuff, right? Now I'm going to play devil's advocate because that's what you need to do if you're an analyst and if you want to trade. You got to always think like the devil, and the devil is in the details. So if this is really a 3-4, and you know what? If you know LA Wave, you know that wave 4 of any degree often targets the same area of wave 4 of one lesser degree. Now, this has just exceeded that a bit, okay? But it's also holding this 100 fib. So to me, it is not fully apparent yet if this is a wave 4 or not. And a wave 4 is typically composed of 3 waves. So and this looks like 3 down so far, only 1, 2, 3. And even internally, it's only 3 down so far. So this is moving in 3s. Impulsive moves to confirm a top. In this context, you want to see a 5-wave move. We don't have that. We only have 3 waves. So I'm not gonna say the top is in yet. But what I am gonna do is pretend this is a wave 4. How would I view this if it were a wave 4? Well, if it were a wave 4, I would measure it with the trend-based fib extension, and I would put one click at the top, just like actually, you're going to measure it the same way we were measuring for an impulse, but the difference is I use yellow, and the difference is I have a different standard fib setup because I don't use the same fibs when I'm looking for a 3-wave move. I use this template called A equals C with extensions. And if you've been following me at all, you know when I'm using a yellow fib set, I'm looking for a 3-wave move, and a typical standard type target for a 3-wave move is a 100 fib, the 1236, and the 1382. So I'm going to move this over. Let's see, what is that? 107,504. I'm just going to move this over. 107,504. Close enough. All right. So as of right now, it is possible that this is the bottom of wave 4 and that my count is actually 1, 2, 3, 4 with ta-da, a 5th wave, one more wave higher for the dollar. Is the dollar strength going to come back and give us a 5th wave up? And then we'll play the same game again, but I think this is a much more highly probable topping area than this is. Although I must tell you, by my way of looking at it, it does measure just fine as a 3-wave move up. But if it's an impulse, I think it needs another high. And this is actually, let's do one other thing. I was going to say this is a decent area to measure for a wave 4. So not only does it project down into the yellow fibs where you would expect an A, B, C. Now let me just go ahead and label it so you know exactly what I'm doing here. Instead of it being a wave 1, it's a wave A. And instead of this being a wave 2, it's a wave B. And this won't ever make it to the real 3rd wave, which is down in this zone, because if it's just an ABC as a wave 4, it needs to terminate here. This is good information to have. Because if this keeps coming and makes it all the way down to here, it is much less likely that this is a wave 4. Much less likely. Could it still be a wave 4? Well, yeah, because anything can happen. But Elliott wave is using standards that are tested over time. And these are the clues that we collect. So if this is really wave 4, inside this C wave should be composed of 5 waves. So, maybe maybe it needs to come down a little bit more. But the point is, now you have some parameters to look at. And I'm showing you how you measure for a wave 4. So one other thing you can do for a wave 4 is go to the bottom of wave 2. But Brad, that's a B wave. Well, yeah, but if this is 1, 2, 3, 4 with one wave 5, another move 5 up, this is really wave 1, 2. But we don't know that yet. So here, I'm just going to do a quick and dirty measurement. Watch this. We're just going to say, here's the low of the 2. Here's the top of potentially a wave 3. So the wave 4 should fall somewhere between the 236, the 382, and the 50% fib. Well, would you look at that? This is the 382 fib in blue. This is the 50% fib in blue. I always track wave 4s in blue. It's good to know. If you're following me, I always track wave 4s in blue. And I measure. When you see blue fibs on my chart, you can believe I'm measuring for a wave 4. This is in the zone for a wave 4. So there are 2 completely viable scenarios right here, right now. And I just explained both of them. So now that you have this information, and we have parameters, because we know, right? Parameters. If this is going to be a wave 4, it really cannot come much below this 105,463 right here. Could this be a wave, a C wave here? It should be in 5 waves. So if this is 3 down for wave 1, 2, or this could be a little bit more complex because 3 down, this could be another 3-wave move inside of here. 1, 2, and then this is 1, 2, 3, 4, 5. Actually, This is what I'm talking about. When you come down on the lower time frames, it becomes less reliable. So the safer way to play is stay on the longer time frames and wait. And if you need to take your trade, if you must trade, use parameters so you know where you're wrong. Like, for example, if price gets back up into this area over here, you got to watch out. And you're also going to want to see if price, here's another clue, my friends, if this is going to get a fifth wave because of the way this measures, it needs to be a fifth wave in 5 waves, very likely. So another clue is not only getting up above this area right in here, but it should do so in what looks to be the beginnings of a 5-wave move. So again, it's always discerning the difference between an impulse in 5 waves or a correction in 3 waves. There's more to it than that, but I'm keeping it simple. Okay. So if price comes up and gets above here, we want to measure the internal structure and see, does this look like 5 waves or is it still corrective or what's going on? Because really what should happen is this should not get into this zone. Sometimes you'll see on my chart, I'll put an X in a certain area. And the reason I do that is to remind myself that I've already taken a bunch of measurements. And if price gets above a certain level, it's less likely that the count that is relevant is gonna play out. So for the moment, I do not want to see price come back up above this level. Okay, so if you wanted to be short, you could be short anywhere in here, but I would not be trying to short if it's up in here. I'd want to see it. If anything, you come down, then you can play for a bounce off of this level, which is the 1618. All right. So now that I've overwhelmed you with information, hopefully this is educational and you're getting something out of it. The dollar is going to affect these other pairs. So, which one was I looking at? Okay, let's look at this one. So, the weaker the dollar gets, the more the weaker the dollar gets, this is going to keep coming higher. Okay, but if that dollar gets its fifth wave that I was just explaining about, then this can make a U-turn and come back down. This is, by the way, this is the EU. So isn't it interesting that this relates to the dollar? Because if the dollar is going to regain its strength, it's going to take fewer dollars to buy the euro. That's why this would go down. So if the dollar is going to continue to be weak, here's another parameter. This is not going to be a wave 4 right here. It's going to keep going. This is the low. And I've tracked this. It's never easy, right? And this was a great short. And those of you that are in the Professor Trades room, some of you, Greta, hello, Greta, if you're watching, love you guys up in New York. She was in the trade with me, and we took it down and covered it at the minimum right at this top of this ratio box, which it tagged, and boom. And then look at the reaction from that. Very nice trading. So it's possible that this is the low if the dollar has topped. So if the dollar has not topped, it's going to take if the dollar has not topped, it's gonna take more. You know what I'm saying? It's inverse. So I got mild dyslexia, so I'm sorry, I don't want to confuse you any more than I may already have. But you get the point. These are correlated because the dollar is in this pair. So that's why I'm paying a lot of attention to the dollar. Because if I can discern that the dollar is topped, and then I'm also looking at Elliott wave on these other pairs, they should make sense with each other. And occasionally when they get out of sync, one of them is going to catch up. So if I feel like I have a distinct advantage on one over the other, that's going to help inform me of trades. Some would call that sort of like a mild arbitrage situation. So that's the deal. So these are parameters for the EU trade. Okay, now this same thing. This is so far it's 3 up, but a real 3 up would get you up here to this yellow fib. Okay, for a wave 4. And then you're going to get one more shove down, which is totally reasonable for how this measures. Okay, so that's the EU. What was the other one I was looking at? These other ones. what's okay, kinda okay, let's look at UJ. So now the dollar is on the front side of this pair. So it's more correlated. So if the dollar is losing strength, it takes fewer yen to buy them, and this chart is gonna show it going down. Now, again, this is a weekly chart of the UJ, and I think it's worth noting, we tagged the 764 fib, like, to the penny and got rejected. But there is a ratio box up here. So if the dollar, again, just as we were, and if the dollar wants to regain its strength and get its fifth wave, well, guess what? This is very possible. This is 3 up. You see, everything is incomplete at the moment, unless this is the top. It would do so in 3 waves. So this is going to be dependent upon what the dollar does as to whether we get one more high or not. Because this measures it. I didn't measure this. I'm just looking at it and saying it's in 3. Let's measure it. I know it's a weekly chart, but so what? Let's measure it. Let's just see real quick and dirty. I probably should. I don't want to spend too much time on this, but if that is A, B, C, you can already see by eye that C wave has really extended on this weekly chart. If that's A, B, C, I mean, really, really extended. Yeah, that's like a 200 fib. But so the fibs, I don't love the fibs that it went all the way to the 200 fib. But what I do see with the naked eye is that this this looks like 3 waves. Okay, so if this is wave 4, okay, it's going to bottom out soon, and it's going to come back up, and you can get one more high. But looking at the UJ in that light, let's look at the UJ on a lower time frame, and wow, look at this. Here now you can see this whole move. And this is really the thing I was measuring on that other chart, as if it were an AB, and this C wave is wildly extended. But it's also possible, actually, now that I think about it, this whole thing is a C wave, which means it would play out in 5 waves, which would be 1, 2. You could get a 3, 4 here, or you could get a 3, 4 here. But in any case, the clue is, do we come down in 5 waves? So right now on the UJ, we have, look at that, 3 waves to the 1618. 3 waves. So you need a wave 4 bounce, and you need one more shove down into this box. If this gives up a 5 wave move down, that's going to be compelling. Okay, but we're going to watch the dollar to keep an eye on these pairs. So the dollar is always going to inform us how we're trading these pairs. Okay, so that's the deal. So for right now, I'm really focusing on the DXY. Soon, maybe over the holiday weekend, I'll start paying more attention to the JPY, figure out a yen, a way to really gauge the yen on its own. I mean, you can't gauge anything on its own. It's always relative to something else, but I think you understand what I'm saying. But for right now, I'm really focused on the DXY and these other currency pairs. I'll just show you one last thing as a bonus. The GJ, this is really the first pair that I ever tracked going back earlier this year into the summer. And I must say, nailed the top, nailed the bottom. Then it got difficult in here. But then I was looking for a top up here. Got it. I was late to the short party, but I did eventually short. And I already covered it. Covered it a little early at the 1618. Fine. Perfectly good trade. And so now what I'm thinking is this needs to bounce at some point. GJ. Now I'm just tracking this pair on its own. I'm not tracking any correlations or anything. I'm just looking at this on its own and thinking that this could very well be either done with 5 down or nearing 5 down. And so we're going to get a bounce, and that'll give the next short opportunity. Okay, cool. Listen, I know this is a departure. I know you guys are used to the oil, gold, silver. I must say, I don't have as much of an edge right now in those metals because they need to figure out what they're doing. They're in a weird posture, metals. That's all I'll say. They could break out. They could break down. I have a slight bias to silver coming down. Even gold, if it continues to go up one more shove, I still think gold and silver both need to come down. So the real question is, do they top? And they never make it easy. So anything can happen, but I have a bias towards the downside in the metals. Even if it gets another mini rally next week, I'm still expecting to come down. And, maybe that correlates to the dollar too, but I don't get into that correlation. It's dangerous. Keep them separate. I track silver and gold on their own. I even track them separately for that reason. A lot of people just lump them together. Bad idea, dangerous. Each chart on its own. Okay. All right, guys. Hey, if you like the different video, if you like the currency, you're getting value, please give me a thumbs up. If you want to keep hearing about currencies, I'm going to include currencies in my videos going forward, but this was just a full-on currency video, starting with the dollar and showing you just 2 pairs. But eventually what I'm going to do is just try to highlight anything that I feel is a clear setup, Elliott wave-wise, in any currency pair. I'm going to cover that in whatever video I'm doing. So instead of just covering oil, gold, silver, there may be weeks where I just cover maybe oil, maybe one metal, whichever one has something to say, and then maybe 1 or 2 additional currency pairs. Let me know in the comments if you like the currency analysis. Keep doing it. Let me know what you think. If you have any questions, drop them in the comment section. I will reply. Thanks. Shout out to the professor, Armando. The Professor Trades, amazing room. For less than $1 a day, you come in, get your psychology right. You get the Elliott Wave stuff for free at the moment. So get in the room. Join Armando. Let him tweak your psychology. Learn in a community full of like-minded people for less than $1 a day. Get the Elliott Wave stuff for free to just give you wider parameters if you're a swing trader. Use the Elliott Wave for targets that are further out. But Armando is killing it with an 83% success rate over a 12-month period, scalping, day trading, and occasionally letting a runner really run. And I'd like to think that Armando is getting value out of me as well, which is why he's so supportive of me and his club posting the charts, because the perfect thing for Elliott Wave is let a runner run. But you got to know the context of when do you want to let a runner run? Because if you can make plenty of money day trading and scalping, but why not let a runner run if you have an edge over the market? And that's what Elliott Wave can give you. Anyway, happy Thanksgiving. Enjoy the weekend. I'll see you guys in the room with the Professor Trades. The link to his club is in the description of this video. Thanks for watching. Bye-bye.